Have you ever been on Amazon? You've filled your cart, you're ready to hit that glorious place your order button, and then you see it. The total, it's a little bit higher than you expected. You scan the details, and there it is. Sales tax. You sigh, maybe grumble a little, and click to buy anyway. But have you ever wondered why that tax is there? For years, online shopping felt like this magical, tax-free paradise. What changed? The story behind that extra charge on your Amazon bill is a legal thriller, a David versus Goliath battle that reshaped the entire internet. It involves a landmark Supreme Court decision that brought a decades-old rule crashing down, and it all started with a state that was tired of losing billions. To understand why your online checkout looks different today, we have to rewind to a time before Amazon was a household name, before you could order a pizza with your voice. Let's go back to 1992. The internet was just a baby, and mail-order catalogs were the big thing. That year, the Supreme Court made a huge decision in a case called Quill Corp. v. North Dakota. The court ruled that a state could only force a business to collect sales tax if that business had a physical presence in the state. What's a physical presence? Think warehouses, offices, or employees on the ground. If a company was just shipping catalogs and products into a state from somewhere else, they didn't have to worry about collecting that state's sales tax. At the time, this made a lot of sense. It would have been a logistical nightmare for a small catalog company in one state to keep track of the thousands of different sales tax rules across the entire country. So, the physical presence rule was born. Then came the internet. Suddenly, businesses like Amazon could sell to anyone, anywhere, without needing a single storefront in most states. For shoppers, this was amazing. It felt like the entire internet was a giant duty-free shop. You'd compare an item at your local store with the price online, and the online option was almost always cheaper, partly because you weren't paying sales tax. This created what many called the e-commerce loophole. The internet became a wild, tax-free frontier. For nearly 2 decades, this was the law of the land. Online giants grew into behemoths, partly by enjoying this huge competitive advantage over the brick-and-mortar stores on Main Street. But while we were all enjoying our tax-free deals, something was brewing. States were watching billions upon billions of dollars in potential tax revenue just vanish into the digital ether. And that's when South Dakota decided to pick a fight. So, why South Dakota? It's a state with a relatively small population and no state income tax. This means it relies heavily on sales tax to fund everything. Schools, roads, police, you name it. As more and more of its residents started shopping online, the state's budget took a massive hit. We're talking an estimated loss of $50 million a year. That's a huge deal for a state like South Dakota. But it wasn't just about the money. Think about the local businesses. Imagine you own a small bookstore in Sioux Falls. A customer comes in, browses your shelves, finds a book they want, and then pulls out their phone, finds the same book on Amazon for a slightly lower price, and walks out. Why was it cheaper? Often, because Amazon didn't have to charge the local sales tax. These local stores, the ones that sponsor Little League teams and create local jobs, were being systematically undercut. They had to collect sales tax because they had a physical presence. But their biggest competitor didn't. It was an uneven playing field, and Main Street was losing. Feeling this pressure, South Dakota's government decided to do something incredibly bold. In 2016, they passed a law that directly challenged the Supreme Court's 1992 Quill decision. Their new law stated that any out-of-state retailer who delivered more than $100,000 in goods or services into the state, or had 200 or more separate transactions, had to collect and remit South Dakota's sales tax. Notice what's missing. Any mention of a physical presence. They were basically daring someone to sue them. They knew this law was unconstitutional under the Quill precedent. That was the whole point. They wanted to get sued, lose in the lower courts, and appeal all the way up to the Supreme Court, forcing the justices to reconsider that old 1992 rule in the age of the Internet. It was a high-stakes legal gamble, and it worked. 3 major online retailers, Wayfair, Overstock, and Newg, sued the state, and the case, South Dakota v. Wayfair *, began its journey to the highest court in the land. On June 21, 2018, the Supreme Court delivered its verdict, and it was a bombshell that sent shockwaves across the entire retail world. In a 5-4 decision, the court overturned Quill *. They killed the physical presence rule. Justice Anthony Kennedy, writing for the majority, was blunt. He said the old rule was unsound and incorrect in the modern age of e-commerce. He pointed out that the physical presence rule was creating a judicially created tax shelter for online businesses. The court argued that the old rule was no longer fair or logical. In 1992, tracking thousands of tax jurisdictions was a huge burden. But in 2018, with sophisticated software that can calculate taxes instantly at checkout, that argument just didn't hold up anymore. The court replaced the physical presence rule with a new standard called economic nexus. This is the key concept. Nexus is just a legal term for a connection. So, instead of a physical connection, a business could now be required to collect sales tax if it had a significant economic connection to a state. What counts as significant? Well, the court pointed to South Dakota's law, that threshold of $100,000 in sales, or 200 transactions, as a good example. They felt it was a fair model because it was designed to not be a burden on small businesses. A little Etsy shop selling a few handmade items wouldn't be affected. But a large national retailer doing major business in a state, they would now have to play by the same tax rules as the local shops. The era of the Internet as a tax-free haven was officially over. So, what did this Supreme Court earthquake actually mean for you, the average shopper? The most immediate and obvious impact was on your wallet. Almost overnight, states across the country started passing their own economic nexus laws, modeled after South Dakota's. Online retailers, from the giants like Amazon and Wayfair down to smaller digital stores, had to start integrating tax software into their checkout systems. That's why you started seeing sales tax pop up on websites where it never had before. For many of us, it meant the price of online shopping went up by a few percentage points. It closed the price gap between online and local stores. But there's another side to this story. The impact on Main Street. For the first time in a generation, your local hardware store, your neighborhood boutique, and your corner bookshop were on a more level playing field with their massive online competitors. The tax advantage that e-commerce giants had enjoyed for decades was gone. This decision gave a fighting chance to brick-and-mortar businesses that had been struggling to survive. It helped preserve local jobs and kept more money circulating within communities. So, while you might pay a little more on your online orders, that extra money is now funding services in your state. And it's helping to ensure that the vibrant local businesses that make our towns unique have a better shot at sticking around. The Wayfair decision wasn't just about taxes. It was about rebalancing the scales of the American economy. Looking back, the South Dakota v. Wayfair case marks the end of an era. It was the moment when the law finally caught up with technology. The wild, unregulated frontier of early e-commerce was tamed and integrated into the rest of the economy. For digital commerce, the future is one where the lines between online and offline shopping continue to blur. Businesses now have to think nationally, or even globally, when it comes to tax compliance. This has spurred a whole new industry of software and services designed to help businesses navigate this complex new landscape. But for us as consumers, it created a new normal. We now expect to pay sales tax whether we're rebuying a coffee down the street or a gadget from a website halfway across the country. The mystery of that extra charge on your Amazon order is solved. It's the legacy of a small state that decided to challenge the status quo, and in doing so, changed the internet forever. It's a fascinating piece of legal history that affects us every single time we click buy. Thanks so much for watching. It's a complex topic, but hopefully this breakdown made it a little clearer. If you found this interesting, please hit that like button and subscribe for more deep dives into the stories that shape our world. See you in the next video.